right now, as we do each and every Wednesday at 40 past the hour, folks, we're going to jump over to our man Teddy Kekstadt. You can check out Teddy's outstanding Tiger Forex Report right under that newsletter tab at the front page of TFNN, folks. It's only $97 a month. He's got new issues every week, updates throughout the week when warranted. You gain access to an archive webinar as well, and you always get a 30-day money-back guarantee on top of it, folks. Check out that Tiger Forex Report. He's got a couple great webinars under the services tab as well. Capitalizing on time with calendar stock option spreads, as well as Japanese candlestick pattern stock and option strategies. Both of those just $97, folks. You sign up, you gain access to them on your members page, and they're there forever. Watch them as many times as you'd like. Teddy Kekstadt, good morning.
Good morning, Tommy.
So we got the 10-year this morning, Teddy. We're touching 4% as I talk to you. We got some dollar action. We got gold at all-time highs. What are you watching most in this market? Talk to me. What are you seeing, man?
Well, the most I'm watching right now is the yen. You know, last week I told you how they were railing into an area where I said, hey, we're getting ready for a nice little sell setup. Friday, we had a nice sell signal, a little bit ahead of where I thought. I thought we might have another couple days. I thought it was going to rally more into this week. And, you know, it kind of, it pulled back. We had a nice little move, and now it's kind of going nowhere with that. And if you look at the other currencies, we've had some volatility, but I have to say, honestly, like we had all the action on Friday and Monday, and now it's kind of, I think things are quieting down because they know there's a Fed meeting coming up, you know. So I honestly have to say I think things are going to tighten and start drifting, actually, to be quite honest with you, except for maybe the U.S. dollar yen. With crude riding near its lows, I think you still have some potential, you know, for basically testing support and maybe going lower. I mean, I thought that the U.S. dollar yen was going to get a little higher than it did. The current swing high off of Friday, I have to say, could be, I'm not calling a top or anything like that. I would say that right now you're probably good being a seller against that high. If we get above that, well, then obviously, you know, there's some potential to the upside, but I think you got to still be careful with it, you know. But there's some volatility there and some swing trade action, especially in the yen. The euro and the pound and stuff like that, I have to say you got to be very careful over the next week and a half as we get closer and closer to the Fed meeting.
And I was, you know, thank you for talking about that yen last week. I was thinking about you, man, as that thing was rocking on Friday, of course. And did they come out and say that did they throw any shade saying, you know, we don't want a weekend? What was that move on Friday? Was it a pullback to anything to do or just a market reaction? Do you know? What was that move? Just a pullback, but we had quite the move, right? From 153 to almost 151 after we just traded from 147. Just a market reaction, or was the central bankers in Japan talking? What was kind of some of that? Was it fundamental or just kind of traders out there?
Well, especially with the yen, you know, there's a lot of fundamentals going on. You have the divergence of the BOJ getting ready to hike rates. And then there's the potential, especially now, leaning on with higher unemployment rate and what have you, that there may actually be another rate cut coming in the next meeting. You know, I was very apprehensive about them cutting. I was surprised they did it in September. I thought that it was going to take a little bit more time. They did cut the quarter point, and you know how I was already after the fact, saying I don't think they're going to do it in October. With rising unemployment, supposedly with the numbers, we'll see how that ticks into the actual meeting. The talking heads are leaning on it. The pressure is with the consensus, you know, is that they're going to cut, but then they've been also saying that for a year. So, you know, they finally get one.
Sure.
Doesn't make them right, you know. So, and the market already has three cuts, you know, three quarter points already factored in. We've only had a quarter. So, yeah, whether or not they do or don't do doesn't really matter. You know, I think really we have to get to that point where they cut at least another quarter and then cut one more time again, and then we can start to look at really trend breakouts as far as, you know, higher prices and lower yields in the 10-year and the 30-year, you know. So with crude oil, now here's the interesting thing with that, you know, the big, you know, Friday was a big sell, you know, it had a nice sell-off on Friday. No matter what, across the nation, everyone's seen at least a 10-20 cent drop in gas prices, you know, because of what happened on Friday. that is a good indication of what's going to probably happen going into, the next couple of weeks, because on Friday last week was when they opened up all the oil leases. They overturned the Biden, restrictions on oil. All the leases are opening up. They're going to drill. Gas is opening, natural gas is opening up, all kinds of other, things in the whole industry, as well as with that new government backing, if you will, the oil services industry is going to start flowing also. So when you start getting those things back online, especially with the more potential for obviously more supply domestically and what have you, now we're looking at, hey, yeah, there's every reason to believe that oil is going to keep pressuring support, and rallies are rallies to sell, and that's very good for the U.S. dollar yen trade, because if now you have a government-supported backing of the oil industry saying, hey, we're supporting you, we want you to flourish and help grow once again, for the country, that means what? No matter what is going on as far as production costs, that the cost of transportation is going to go down, at least as far as oil. Oil, gas, diesel, the whole thing, everything is going to start to go down over the next year. That one variable. I can't say about all the other variables that can cause inflation and what have you, but that one variable, which is a huge one, will go down. And that also is especially reflective for the consumer. No matter what, your grocery prices, it's going to be really hard to keep having inflation in food if the cost of transportation keeps going down. So you're going to have another reason for food inflation, or even keeping it at where it's at, So we should start to see that, at least in certain sectors, and this is going to take, a good 6 months to a year, but we will start to see it. And this is definitely solidly, we know these are trend fundamentals that are setting off, that are going to be in motion. And that's big for the U.S. dollar yen trade, because just think, if oil can stay just even remotely in the, say, I don't know, mid-50s to mid-40s, well, what does that do for trade with Japan? Well, their cost of production goes down, which means that even whether there's tariffs, no tariffs, taxes, inflation, or whatever, anything we get importing-wise, the costs will go down, irregardless of dollar fluctuation. Your cost of, I'm saying, like that one variable.
Yeah.
So I think we really have some interesting swings that are going to come in across multiple markets over the next, I would say, you're not going to see it until probably February, March. But I think your first quarter numbers are going to really surprise people next year. Like, they're really going to hit people where they're going to be like, whoa, we didn't see this reversal coming. Well, that's because you weren't paying attention to what's happening right now, and, there's a lag, certain things are leading, lagging. So
I love the walkthrough, man, and I agree. And those rates, folks, they got 2 cuts. I was looking at just Fed Fund Future. It's like 95% chance the market thinks. So don't, and I agree, as in they've priced the 10 years at 4%, folks, because they already know we're getting maybe a couple cuts. We'll see where we go from there once we get past that coming into the year. Teddy, great conversation as always, man. I appreciate it. We'll talk to you next week.
Thanks, Tommy. Take care.
Thank you. Folks, we'll be right back.